Today Nifty fell only 0.64%. But internally the market told a completely different story. While the index looked controlled on the surface, heavyweight stocks were bleeding, sector leadership was missing, and market breadth turned sharply negative. The big question traders must ask now is whether this was just a pause before the next move or a silent warning before deeper correction. Welcome back to Wealth Maama, where we decode not just where the market moved, but why it moved, who controlled it, and what traders should prepare for next. If you want structured, data-backed daily Nifty analysis without noise, you are at the right place. Nifty opened today at 25,951, already below the previous close of 26,027, clearly indicating a weak opening bias. After the open, the index attempted a mild recovery but failed to sustain above 25,980, which turned into an intraday rejection zone. Selling pressure gradually increased through the session, and Nifty finally closed at 25,860, down 167 points or 0.64%. Intraday, Nifty formed a range between 25,980 on the upside and 25,834 on the downside, showing controlled but persistent selling rather than panic selling. Volumes expanded to around 2,643 lakh shares, indicating that this was not a low participation move, but a session where sellers were actively present. Market breadth was clearly negative, with only 11 stocks advancing and 39 stocks declining, which immediately tells us that this fall was broad-based and not limited to just one or two stocks. Why market moved today? The primary reason for today's decline was heavy selling in banking and financial stocks, especially private banks, which carry significant weight in the index. Axis Bank's sharp fall of more than 5% single-handedly dragged Bank Nifty lower and removed any possibility of Nifty sustaining above key resistance zones. At the same time, global cues remained mixed, offering no strong positive trigger. Asian markets were largely sideways, US futures were flat, and there was no supportive macro news to attract fresh buying. In such an environment, traders preferred to book profits after last week's rally rather than take fresh directional bets. Another important factor was derivative positioning, where traders appeared cautious ahead of upcoming events, keeping risk low. This resulted in intraday selling whenever Nifty tried to move higher, especially near 25,950 to 26,000. Sector-wise performance. Sectorally, the market showed clear divergence rather than uniform movement. Auto stocks managed to hold relatively better, with names like Titan, M&M, and Bajaj Auto posting mild gains, helping limit deeper downside. FMCG stocks were mixed, where selective names showed resilience, but overall momentum was missing. IT stocks continued to remain weak, with stocks like HCL Tech, Infosys, and Wipro closing in the red, reflecting continued caution around global tech demand. The metal sector faced strong selling pressure, with stocks like JSW Steel and Tata Steel declining sharply due to global commodity uncertainty. Most importantly, banking and financials acted as the biggest drag, with sustained selling across private banks, clearly signaling institutional distribution rather than retail panic. Before we move to stock-specific action, quick reminder: if you want daily Nifty analysis, weekly market psychology breakdowns, and trader mindset videos, make sure you explore the playlists on this channel. These videos help you understand why markets trap traders, not just where price moves. Now let's continue to gainers and losers. Even on a negative day, a few stocks managed to outperform. Bharti Airtel gained about 1.7%, closing near 2,105 rupees, supported by defensive buying and stable earnings expectations, making it a safe haven during market uncertainty. Titan rose nearly 1.65% to around 3,930 rupees, supported by continued strength in discretionary demand. Tata Consumer Products advanced 1.26%, indicating selective FMCG buying despite overall weakness. M&M gained around 0.6%, benefiting from relative strength in auto stocks. Bajaj Auto closed higher by 0.55%, supported by export optimism and sector resilience. These gains, however, were not strong enough to offset heavyweight selling, which is why the index still closed in the red. On the downside, the worst performer of the day was Axis Bank, which collapsed more than 5.1%, closing near 1,219 rupees. This single stock caused major damage to Bank Nifty and confirmed aggressive institutional selling. Eternal fell nearly 4.7%, continuing its post-rally exhaustion phase, showing clear profit booking. JSW Steel declined around 2.7%, dragging the metal sector lower amid weak global cues. HCL Technologies dropped nearly 1.9%, reflecting ongoing IT sector weakness. Tata Steel fell about 1.8%, extending metal sector pressure. This loser list clearly shows that heavyweight and momentum stocks were sold, not small caps, which is a warning sign for short-term traders. India VIX declined by about 1.7% to close near 10.07, indicating that fear is not expanding aggressively. This suggests that today's fall was controlled distribution, not panic selling. However, low VIX during a falling market also warns traders not to become overconfident, as sudden volatility spikes can occur. Support and resistance for next session. On the downside, 25,800 is the immediate and crucial support. A break below this level can open the gates toward 25,750. On the upside, 25,950 remains the first resistance, and only a sustained move above 26,040 will restore bullish momentum. As long as Nifty trades below 26,000, upside attempts should be treated cautiously. The short-term structure now suggests a sell-on-rise market unless strong buying emerges from banks. If Nifty holds 25,800, we may see consolidation. But if this level breaks with volume, further downside cannot be ruled out. Traders should avoid aggressive positions and focus on price confirmation rather than prediction, as the market is currently driven by stock-specific action rather than broad momentum. That's it for today's Nifty analysis. Trade with discipline, respect the levels, and avoid emotional decisions. If this breakdown helped you, do like the video and stay connected for daily market insights. See you in the next market update.